You were listening to chartingwealth.com for Tuesday, the 12th of December, 2017. As the week opens on Monday, we see the S&P 500 up 0.30%. The Q's up substantially, 0.78%. As would be expected, bonds are down 0.21% and gold is down 0.40%. Let's knock out these charts in the 10 minutes you give us every day the market's open. What do we see going on in the S&P 500? We see going into our fourth week of up movement. Now again, it's just the first day of a 5-day candle. Things are looking nice. Derivative oscillators gaining energy. Price percent oscillator continuing to move up on that weekly chart. Price movement well above the weekly trend line. Remember, we had a crossover going up all the way back on the 29th of September. It has been beautiful, but for 1 week of pullback, that was on the 17th, but the 17th of November, but we have never had a crossover since that time going down on the weekly chart. We've had some weakening, sort of sliding sideways on the derivative oscillator and the price percent oscillator. Derivative oscillator losing some energy, but gaining it back over the last 3 weeks. So again, strong up movement. How far will the market go up? Who knows? Remember, we are trend followers. We follow the trends. We do not forecast. That's the way you make money in the market, not by trying to be a fortune teller. Okay, let's keep going. What do we see going on the 2-day chart? Well, price movement fell out a little bit over the last full 2-day candle. That is the one ending on Thursday the 7th, and that is not the last. The latest 2-day candle finished drawing today, but that prior candle was a doji with a bit of a pullback and sort of caused us to reset our 2-day trend line. Can we connect 3 candles yet? No, not quite, but we'll continue to see. What we can see, price movement is above, however you want to draw that 2-day candle. Price movement ended above it, in fact, above the Bollinger Band, and we see an uptick in the price percent oscillator clicking up and the derivative oscillator continuing to move up strongly. So what do we see now as we delve into the 4-hour chart? Were you guys paying attention today? Remember, we had that pullback and we had the crossover in the afternoon, moving up. A jumping in point for those of you interested in getting into a virtual trade on the S&P 500. Now that that candle is drawn, look for a jumping in point tomorrow. Probably the safest time, at least after the first hour of the market is open around 10:30, or if you just want to do our traditional way, wait until noon, see how things look. The candles are looking good. Jump in on that up moving candle. Okay, and we shall see how things continue to ride. Now again, only caveat is we're long in the tooth. If you jumped in way back and continue to ride the baby on the weekly chart, you have done rather well. If you jumped in and jumped out as the 2-day chart rotated over, you've still done extremely well. And you can, of course, jump back. I'm sorry, the 4-hour chart. You can, of course, jump back in. The 2-hour chart would have been even better. But we'll just continue to monitor what's going on, tell you what we see. As I look at our weekly chart on the S&P 500, it reminds me the purple line is our quarterly drawing. And of course, we will watch at the end of December. We will produce for you yet another update on our quarterly chart. We only look at it once every quarter, but you guys know the magic of the quarterly chart. We will be giving that training at the end of the month. If you want to be in line to get it, of course, you need to be a subscriber at chartingwealth.com. It is for free. Go there, put in your name, your email address. You'll receive our daily market reviews and our once-a-week comprehensive review and forecast, plus all the great information, the how to read a stock chart video, the layout that we use at freestockcharts.com, and the trading worksheet, the weekly market worksheet, and the daily market worksheet. Let's go to the Qs next. Qs up substantially more, over 2 times what the S&P 500 was up, 0.78%. That is quite an uptick. What do we see going on? Well, As we zoom in on that chart, we had 2 weeks of down movement, the week ending the 1st of December and the week ending the 8th of December. That was more of a doji. We, of course, had a 2-day crossover going down. We'll get into that in a minute, but our weekly crossover going up happened all the way back. And again, we have to tune that in a little closer. It happened all the way back on the 27th of October. Things went up nicely for 5 weeks, then 2 weeks of sideways sliding. And so far as this week starts, it has started moving up, which is nice for the first day of the 2-day candle. Derivative oscillator still losing energy. Price percent oscillator also headed down toward the red signal line. We thought there might be a crossover going down last week. Did not occur. So we'll continue to watch and see if there are big strong days like there was today. Then, of course, we won't see that happening anytime soon. On the 2-day chart, we had 4 down candles. That's 8 days of down movement. And then the week started off on Monday with a big up move. Still confirmed down move on that 2-day chart, so we don't have a trade on the Qs at this point. Weekly moving in the up direction. 2-day chart in the down direction means no trade for the Qs, but we'll continue to watch and see. Maybe we'll have a crossover going up on that 2-day chart before the week's out. What do we see going on the 4-hour chart? Well, it crossed over going up in the morning, on the morning of Friday the 8th, and it's continued to move up pretty strongly. Again, we'll just continue to watch things, see what we see. Price movement still below the weekly trend line. It did cross through the down moving 2-day trend line. So we shall see what we see on that chart. No trade at this point on the Qs. We'll continue to watch it, keep you posted. What's going on TLT? That's the 20-year bond. Remember, we had the crossover going up back on Friday the 1st of December. We had an up week over the past week, a green up candle on our chart, on our weekly chart. So far, even with the down move, again, remember, we use Heikin-Ashi candlesticks, so they are measured differently. Heikin-Ashi means average pace in Japanese. We like them. What do we see going on so far? Derivative oscillator gaining upward energy. Price percent oscillator slipping a little sideways so far for the week. But again, like we keep saying, it's only the first day of a 5-day candle. But we do see some up movement so far as our indicators go. As we hone in a little deeper, what do we see going on the 2-day chart? Not only is it going flat, but down. This latest 2-day candle, excuse me, is a red spinning top. Again, meaning down movement. Hasn't yet crossed through the 2-day trend line or the weekly. It's laying right on it, so we'll see if things continue down for the week. So again, continue to keep your eye on that. You don't want to gain what you've earned if you jumped in on that weekly vertical crossover going up. We know that some of you already pulled the plug when you had that big down move on the afternoon of Thursday and then the morning of Friday with that 4-hour crossover going down. However, things have really just slid sideways. So continue to keep an eye. We do see a kink over going down on the price percent oscillator. That is our king of indicators. And again, with it going down like that and the derivative oscillator gaining downward momentum, typically means that things are going to continue moving down. But keep your eye on it. Let your real trigger, if you've not jumped out yet, be crossing over those 2-day and weekly trend lines. Okay, going to the last of our ETFs that we review, that is gold. Remember, gold in a confirmed down move on the weekly chart all the way back on the 6th of October. A lot of sideways movement in gold, but the prior week, a lot of down movement. So far during the course of this week, just the first day, down 0.40%. Big red down candle for just the start of drawing this candle. So again, downward momentum on the derivative oscillator and the price percent oscillator spiking down. If we look at the 2-day chart, what do we see? We see 4 strong candles with ever increasing downward movement on those Heikin-Ashi candlesticks. Same with the derivative oscillator gaining lots of momentum. Crossover on that 2-day indicator, 2-day vertical crossover going down back on the 2-day candle ending on Tuesday the 5th of last week. So again, strong down movement. Let's take a look at that 4-hour chart. I tell you, we're getting closer and closer to the 15th, and that 4-hour chart is still working. Stopped working for a while, but man, with this latest down move, really did gear up and has done nicely for us. But the rate of movement down has slowed substantially. So again, keep your eye on that 118 mark. We've told you that has been a place of some support in the past. So watch and see if you have a bounce off of that or if it continues moving down. Now again, where do you look to try to find support? Well, you look back in the past where things have leveled out before. And of course, we saw things all the way back in May and March around the 118 mark where things settled off. We then, in the more recent future, saw things move down and bottom out around the 115. So it blows through the 118 mark. You may have another $3 a down movement. So just keep an eye on gold. If the markets keep moving up, typically gold and bonds are safe havens, where if the market's doing poorly, they tend to go up. This is historically. And when the market is doing well, they tend to go down because people take their money from those, quote, safer areas and put them into a market that's rising. So again, those rules don't always hold these days, but those are the old ways that we looked and thought about things. Folks, that's where we are as we end the day on Monday the 11th and go into Tuesday the 12th of December. Thank you so much for being with us. We'd love to hear from you. You have questions, problems, concerns. All you need to do is write us CW at chartingwealth.com. Again, make sure you subscribe. You can also follow us on Facebook, Twitter, Instagram, YouTube. We sure appreciate you subscribing to our YouTube channel. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.